Well, how's it going, friends and family? My name is Amos, and it's that time again. It's time for another portfolio roast session. And this one's going to be a little different. We've got a growth portfolio that's trying to make the pivot into becoming a reliable cash flow machine. Now, I'm going to tell you this right now. Whenever you make that change, well, that's when things get pretty interesting. So you might want to pay attention. And I'm going to go ahead and pretend that I woke up and it's my portfolio that we are working with, and this is my situation. So now, my name is Elliot. I'm 32 years old, and I was a public school teacher for quite a while. However, I don't want to say this out loud and publicly, but I just called it quits 2 weeks into the school year because I just couldn't take it anymore. I was fed up with the administration, and the students don't even get me started. Their parents, they do a terrible job of teaching them mannerisms to how to behave in the classroom. I'm just over it. So I quit. I've been unemployed for a month or so now, and I'm at this fork in the road where I'm contemplating transforming my portfolio into a passive income, reliable source of revenue that can cover my living expenses as I'm thinking about whether I want to go to South America, Southeast Asia, East Asia. I just want to get out of the US and try to live off of my portfolio. Now that you know my story, let's go ahead and take a look at my portfolio. So the goal of my portfolio up until this point, since 2020, I've been investing into the stock market for about 5.5 years, has been total return. Performance over everything and anything. Dividends weren't really important up until this point, because if I want to turn this, what you see on your screen right now, into a cash flow machine, dividends do matter. Now I'm changing teams. And the strategy of how I accumulated all of these shares was to buy beaten up, high quality compounders on the discount and then just to hold. So whenever I saw a company like Amazon, Meta, or even Google getting sold off by the stock market, that's when I started to dollar cost average. I buy and then I hold. I really don't sell. So I practice the tenet of being a long-term investor. However, now I'm looking for cash flow, so my portfolio does not really make sense. And the current valuation is about $247,000. Yes, I achieved that as a public school educator in inner city Detroit. And for the most part, I'm in the green with almost every single one of my holdings, except Ping An Insurance, a Chinese-based insurer. I'm in the red with Tyson, the poultry meat company, and I'm also in the red with PayPal. So after taking a good, long, hard, thick, and hairy look at my portfolio, what are my high-level thoughts and opinions after just sitting with it? Well, right off the bat, observation number one, I'm not going to lie to you. This portfolio is pretty darn aggressive. And something else that I want to mention before I forget, it is worth noting that I, as Elliot, I have about $60,000 also invested into ETFs that cover the QQQ, the S&P 500, and etc. So I do have extra cash, which brings my total net worth to just above $300,000 as a teacher. And then point number two brings up a question that is going to be the biggest of them all. As I transform my portfolio into becoming a dividend income machine, I don't know if I want to sell everybody. So who exactly are the winners that I should keep, and then the ones that I should get rid of, and then to buy the dividend income ETFs? And I think to answer that, let's take a look at some of my holdings, right? I have Amazon, Meta, Google, United Health, Altria, Walmart, Lockheed Martin, and McDonald's. Now with that in mind, who do I think are going to be the winners? Well, let's go ahead and take a look at the S&P 500 index, otherwise referred to as the market. It's the benchmark that we all try to beat as investors for the most part. If you are an income investor, not so much, but for most of us, yes. Who are the winners within the S&P 500? I would argue it's the Mag 7, the Magnificent 7, and the blue chip household names that we all know and love. For instance, the first one, the biggest market capitalization, is NVIDIA with $4.5 trillion. That's absolutely insane. For the past 1 year, just share price appreciation taken into account, not baking in their tiny little dividend, is 54%. Past 5 years is 1,283%. If we do it again with Microsoft, past 5 years, 147%. If we take a look at Apple, 120%. Google, 234%. Meta, 173%. Amazon, I'm not going to lie to you. For the past 5 years, to only be up by 40%, that is a little disappointing. But out of the top 7, that's only one that's kind of lackluster so far. We take a look at Broadcom, 815%. So by investing at the Broadcom for the past 5 years, you would have 9x'd your money. Tesla, you would have 3x'd your money. Berkshire Hathaway, a very boring conglomerate full of all these different companies like insurance, like Geico, Dairy Queen, Brooks Running Shoes, even they're up 133% in 5 years. JP Morgan Chase, you would have 3x your money. Oracle, you would have 4x your money. Walmart, you would have 2x your money. So in my humble opinion, I think the winners in my portfolio that I ought to keep are the ones that resemble the names that you see in the top 25 of the S&P 500, the blue chip companies, the Mag 7. And fortunately for me, I do have those companies represented. Microsoft, McDonald's, Lockheed Martin. So as it stands right now, I'm probably going to keep those quote-unquote winners as I look to sell everybody else. Now, before I give my take on how I would turn this portfolio into a passive income machine, let's go ahead and give this portfolio, as it stands right now, a grade and a rating according to the portfolio scorecard. In terms of the asset and strategy fit, like do the position holdings make sense for the goal that I have up until this point? Well, let's go over the facts. The portfolio has 24 different stocks, and the top 5, Alibaba, Amazon, Meta, Google, and Tencent, it makes up 62.3% of the portfolio. That's a big concentration allocated towards the top 5. And about 40% of the overall portfolio is invested into Chinese-based businesses and companies. But with that said, I do have some high-quality American companies as well that I bought on the dip. So it kind of balances things out, but I would say it does skew heavy towards the Chinese stock market, which for most investors that do dabble in Chinese stocks, it probably makes up like 1, 2, maybe 5% of a portfolio. And from my understanding, to have 40% of a portfolio be allocated towards them is probably on the extreme side. But the goal, keep in mind, was total return and performance. And unfortunately for me, I don't know if the ROI was worth it for the past 5.5 to 6 years to be invested into the Chinese stocks, because my return on investment from them has not been too great. So consequently, I would give myself a C+. Now, moving on to the level of risk, going from 0 to 10, 10 being absolutely risky. Now, after having spent some time in the stock market as an investor, listen, I'm not delusional, okay? I'm starting to not feel so enthusiastic about the Chinese stocks having a better CAGR than the American Mag 7 going forward. Furthermore, I'm not really feeling the oil and gas players in my portfolio such as EPD and PBR, the Brazilian-based oil company. However, I do like the fact that I was being a little cute and thinking outside of the box when I found them, because I was like, wait, no one else sees this opportunity? And I put them into the portfolio. But I'm starting to see that they're not the best in their own sector. Now, if oil and gas has to be a requirement going forward, I'm learning now that I would rather go with the diversified ones that do upstream, midstream, downstream, and everything else, manufacturing, processing. I would rather go with the ones that have all their bases covered and have a more resilient future, such as, I don't know, Chevron, ExxonMobil, and even Shell. We'll throw them into that conversation. The ones that I have, yeah. And then something else that I want to call out is Tyson, the poultry chicken meat producer. It's kind of like an oil and gas stock, because when you think about it, chicken and meat is basically a commodity where the cost to do business, the cost of goods sold on the biggest line item expense in the income statement, it can go up and down. And so that's going to impact my bottom line. Like if the price to buy and process chicken meat is expensive for that quarter, you can bet that my EPS is going to go down and take a hit. So I don't really like that fluctuation. But on the other hand, if my portfolio only consisted of like, I don't know, Alibaba, Google, Amazon, Meta, United Health, then I think the level of risk would be like a 3.5 or 4 out of 10. It would still be moderately risky, but it would be covered with high quality businesses. But because I do have a lot of concentration into China and cyclical stocks, it just brings me over the edge. I think the level of risk, you can disagree with me, but I think it's a 7 out of 10. I think inherently by investing into Chinese stocks, that bumps the risk level up to a 6. And the cyclical stocks, not doing me any favors. And when I think about the quality of holdings, giving it a grade from an S all the way down to an F is just absolutely disgusting and ugly. I would argue half of my portfolio is best in class, hands down. They have a wide economic moat with Parmesan and mozzarella all over them. They're cheesy, they're juicy, they're compounders. The other half of my portfolio, okay, I'm going to be honest and transparent, less than desirable. They're not that cute, beautiful, or even tactically sound business operations. They're kind of speculative. So ultimately, the quality of my holdings, a C-. Now, if I made up my mind that I was going to live abroad and I wanted to retire right now with about $250,000, this is how I would do it. I'm going to give 2 scenarios. Scenario number 1, what you see on your screen right now is going all in. I'm going to use about $175,000, $180,000 for the transformation. And I'm going to reallocate about 3/4 of my portfolio into very aggressive high yield payers that comes with about an 8.5 out of 10 risk. So $182,000 invested into just 2 income ETFs, $155,000 into BTCI, which is an income ETF generated upon the cryptocurrency of Bitcoin, and then $27,000 invested into YieldMax's Alti, or about 5,000 shares, which means if you're paying attention, I would still have about 25% of my portfolio invested into the winners that I think will outperform in the next 5, 10, 20 years, such as Amazon, Meta, Google, etc. So $182,000, what would that look like in dividends? If I jump on over to the dividends tab, that would generate $63,941 in dividends. At least that's what it did in the past 12 months. This is real numbers that it generated in the past 12 months. Every month, I could expect about $5,300. If you know anything about Thailand, the Philippines, Chile, or Costa Rica, dude, $5,000, you can live like a king. You can live in a very comfortable lifestyle. Maybe not like the top 1% of those respective countries, but I can eat out every single meal, and I could have a huge condo near the beach. Every day, that would be $175. Now, the reason why I'm saying this is an 8.5 out of 10 on the risk scale, that's a 35% dividend yield. I'm going to say it again. Whenever you get above a 15% dividend yield, regardless of what it is that you're invested into, that's when things get a little hairy. But desperate times require desperate measures. So if I wanted to go all in, and I'm done with the workforce, $63,941 in dividend income from my current portfolio, not too shabby. Now, scenario number 2, where I don't want to commit to this idea of going all in. I want to keep it a hybrid portfolio that still generates a high income. Then that would require about $85,000 from my portfolio to be pivoted into 2 different income ETFs, or about 1/3 of the portfolio. But instead of the Bitcoin income ETF being the bigger share of the pie, now it would be the YieldMax Alti, with about $57,000 invested into Alti, or 10,500 shares. And then for the BTCI, roughly 450 shares, or 27,958. Now, even though it's only 1/3 of my portfolio going into these 2 funds, I would argue this is me pumping it to the max setting of a crazy yield that comes with a 9.9 out of a 10 scale risk. This is about as risky as it gets, but if I wanted to do it without allocating about 75% of my portfolio, and I only wanted to do about 33, 34%, this is how I would do it. And it would still generate a pretty hefty, generous dividend income of about $57,000, $4,700 a month in dividends. I still think you could live in a very comfortable and lavish lifestyle in Thailand or even in the Philippines with that much money. $156 a day, US dollars, by the way. So once you convert it to the local currency, you're gonna be living like a king. Just from YieldMax Alti, that would generate $49,000 in dividends. From the BTCI, about $7,300. The overall portfolio yield, get this, 66.8% dividend yield. And that's why I'm saying it's a 9.9 out of 10 on the risk scale. Absolutely risky, but if I had to do it, this is what I am contemplating. Now I hear you. This sounds absolutely crazy and like a lunatic speaking, but regardless of either scenario, whether I'm going all in or I'm just dabbling but still making a pretty generous income, I'd personally still keep my $60,000 invested into the index funds as a fallback in reserve, just in case things don't work out, or if I do in fact change my mind. Because to have $60,000 to run back towards in a very coherent investment like SCHD, VU, or even QQQ, I don't have to start at ground zero. I think that 60 grand will probably turn into 70 or even 85,000 by the time I'm into like year 2 or 3 into my little retirement. And if you were paying attention, then you would realize that in each scenario, I'm not thinking about selling all $250,000 in my portfolio and going all in to these income ETFs. I would hold on to my best compounders in the portfolio in order to let them climb higher. The ones that will truly have market-beating returns. Because that's also going to play into the factor of if things don't work out with this high income retirement idea and I do want to pivot back to the US, at least I'll still have my Amazon, Meta, and Google United Health to hold me at night. Now, I really don't want to offend anybody or hurt your feelings, but that does not include Tyson. That does not include Crocs. Now, I'll say this, Crocs, fundamentally, through their financials and metrics, they are undervalued. But because they operate as a retail brand, clothing and shoes, the markets will never price them with like a 50, 60, 70 PE. So at this point in the video, I'm going to be communicating with myself and my intrusive thoughts. So it's going to be going back and forth with Elliot, okay? Number one, instead of taking a permanent retirement, dude, I would argue, I think right now you're burnt out. Take a mini vacation for 3 months, or even do like 6 months or even a year. I know the whole being a teacher thing didn't exactly pan out, because I'm sure when you went into the field, you had all this ambition and motivation to inspire the next generation, to bring up our youth to being model citizens. But after being in the classroom year after year, you burnt out. I get it. But don't let a bad experience in your career make you tap out for good in the workforce. Because 32, dude, you're so young. Take this vacation. You have time to let it all out, have some fun, figure things out, and then to get back to the grind. That way you can make this portfolio even bigger. Because as you can see, at $250,000, you can make a lot happen, especially if you pivot into passive income, dividend-paying ETFs. But wait until you see what kind of magic a $500,000 portfolio can do. Because if you accrued this portfolio after 6 years in the professional workforce, you can get to 500 grand. I'm telling you, Elliot. I'm talking to myself. Hi, Elliot. Oh, hi, Elliot. And in regards to using margin in order to fund this mini vacation or to buy more stocks like I have been, I just have one word: stop. Even just doing this idea, making it come to life, is risky as it is. To go on margin just adds another unnecessary element of risk. Stress that you're always going to have to be thinking about in case you get margin called. Let the portfolio fund your lifestyle and enjoy your time off. Stop dabbling with margin and loans in order to buy stocks. Because the wisest advice that I ever heard while I was sitting on a toilet, I think this happened like a few years ago, don't gamble with money that isn't yours to begin with. Because once you do and things go south, dude, it gets really, really sticky. Because I'm going to tell you this right now. It works until it doesn't. And then you'll feel an immense amount of regret, mental pain, and you're going to feel a lot of turmoil in your stomach. Just ask anyone who's ever been margin called before. It's a terrible thing to go through. Stop messing around with margin. And my head is spitting out another question. Should I keep doubling down on Chinese stocks? I'm going to tell you this right now. The high quality Chinese companies, they have absolutely crazy fundamentals and numbers. I would even argue they're beautiful. Case in point, let's just pull up Alibaba. This is the Chinese equivalent of Amazon. If I jump on over to their income statement, I may just look at their freaking revenue situation. It is absolutely bonkers. And if I jump on over to their balance sheet, it gets even better. Look how much freaking cash that they have on hand. That is funny money. If I pull up another one, I don't know, JD. If I pull up their income statement, look at the growth of their freaking income. That is absolutely crazy, and I would say very beautiful. However, we have to keep in mind that the stock market is not just predicated upon numbers and fundamentals. I hate to say it, but there is an element of psychology playing as well. Big money in the US will remain bearish on Chinese stocks until the narrative and the sentiment changes. And when I say big money, I'm talking about the hedge funds, the super investors, and the whales that are walking among us that also happen to be retail investors. They do not care. They don't care if the Chinese companies are crushing it. They refuse to buy into them. If the big money does not go in, then their valuation will never skyrocket. Yes, they might see modest gains, like a 3% year-to-date performance, but you'll never see a 300% gain in the past 1 or 2 or 3 years because the big money is not playing with you, especially because their market cap is $51 billion. Now, if this was a small cap Chinese company, then a little bit of money could make them skyrocket. But when it's a $51 billion large cap company, it's going to take a lot more momentum in order to shift things and the tide to go in your favor. They do not see eye to eye with the equivalent of Amazon, which is Alibaba, and Meta having a potential domestic market base that's 3 times bigger than the US. The US population is like 330, 350 million, depending on how the population shift pans out at the end of this year. I know there's a lot of like craziness happening back in the States. I live in Japan, but I do watch the news from time to time, so we'll see how all that shakes out. About 350 million. China, dude, they're well over 1 billion. A huge customer base and demographic to play with, and their numbers have so much more potential, but it doesn't matter. Because whenever I feel tempted to buy a Chinese stock, I always just remind myself of GTB, geopolitics, tariffs, and barriers. That's all I need to just remind myself that despite Chinese stocks having crazy numbers with insane growth year over year, it doesn't matter because mainstream American investors won't see eye to eye with me. So I just don't bother investing into it. Now, snapping back to reality, now I just want to be Amos and I just wanted to talk to you guys. What do you think of Elliot's situation? I genuinely want to know. Do you love his current portfolio as it stands right now? Do you hate it? What do you think about his whole idea of trying to turn this into a cash flow machine so that he can retire and tap out of the workforce for good right now at $250,000? And amigo to amigo, I just want to talk to you, Elliot. Hopefully you hear me out and you watch this video all the way through. I just want to say this, in case no one has told you. Do not feel ashamed or embarrassed about quitting the teaching field. Because I'm going to tell you this right now. Every single one of my friends, even my military colleagues that decided to leave the military and become a teacher, and my really smart friends from high school and college that went to an Ivy League and became teachers that way, every single one of them have quit. Because the current landscape, dude, unless you're a teacher, you don't understand. Like, I'm talking to the people that have no idea how complicated and how difficult it is to be a teacher right now. Because it is super stressful. The administration is always on your back. They're never on your side. They always give you more tasks than you can handle. And the parents of the children, dude, they just make things worse. And don't even get me started on the pay. To get a master's degree, to have a salary of about 45 to 55 grand makes no sense. Now, obviously, if you work in San Francisco or San Diego, it's higher. But most teachers do not live in sunny California. Most teachers are living in rural Wisconsin, Detroit. They're teaching in inner city Chicago or Baltimore. They're getting 30, 40, 50 grand. And I'm going to go on record by saying that it's a noble profession that deserves better compensation and higher respect. For some stupid reason here in the US, we disrespect our teachers and we treat them like trash. We treat them like babysitters when they're doing one of the most difficult tasks in life, which is to take 20 to 30 children or youth and to turn them into respectable human beings that are educated and intelligent enough to think for themselves. Instead, we degrade them and say, they don't deserve 50 grand. As a matter of fact, we should pay them less. Dude, that just chaps my butthole. So I feel for you. So do not feel ashamed because you can absolutely pivot into a more stable career field that pays you more with less hours based on your current skills and resume. Trust me when I say that. Because every single one of my friends that quit, they all successfully pivoted into corporate America or they started up their own business operation. But if you want to jump into a stable field with your resume as it is, dude, you could easily jump into HR, talent acquisition. You could become a project manager. You could join the learning and development team for Amazon, Microsoft. You could do it because anybody with half a brain like me, we realize how capable teachers are. You guys can crush it outside of the classroom. I mean, for crying out loud, if you take a look at the flag behind me, I'm a Tottenham Hotspurs fan. Our current head coach started out by being a kindergarten teacher, teaching PE, and now he's a freaking head coach for one of the biggest football clubs in the world. And before I sign out of here, on an unrelated note, I wanted to give a dedicated shout out and publicly praise Dan V for contributing towards the baby registry list. Dude, I appreciate you so much. You don't even understand, brother. From the bottom of my heart, thank you so much. Now, to give a current status update, if you can't tell, I'm feeling a little bit better. On a scale of 1 to 10, 10, I'm on my deathbed. Number 1, I'm absolutely healthy. I'm finally operating at like a 3.5. I mean, my veins are still pumped full of Dayquil and Tylenol and Sudafed, and that's why I'm able to get by with filming. But, dude, last week when I was uploading videos, I was at like a number 6 or 7. Dude, I was feeling it. It was terrible. But anyways, a situation update on the baby. Yesterday, we were at the hospital from 5 a.m. all the way to 12 p.m. That means we had to wake up at 4 a.m. to get to the hospital on time to do the check-in, to get the IV, to do all of that jazz, to do the ECV, to turn the baby upside down, to make sure the head is facing the bumhole. Well, it didn't work. And I'm not going to lie to you, I was devastated. I was like, oh, crap. So now we're walking down a path that we didn't even consider in the beginning. Because we were like, oh, we're going to do the whole natural thing with as little drugs and surgery as possible. Now we're on the path of a scheduled C-section. And as unfortunate as it is, I have to be grateful because at least the baby mama is healthy and the baby herself, she's healthy too. So instead of thinking about and concentrating and focusing on the negative, I'm like, well, at least we're still happy and at least we have each other and at least we're healthy. And the reason why I'm saying all of this too is because this morning, man, I was eating my breakfast and I was scrolling on my phone as I usually do. I usually look at Wall Street Journal, The Economist, and I look at and I dabble at some sports feeds. And I ran across this ESPN short about this football player. He was like 18 years old. His name is Demetrius Walker. He goes by Michi Walker. He had all the talent in the world to go to almost any Power 5 school, but unfortunately he was diagnosed with cancer that was really aggressive and it spread all over his body to the point where it became terminal. And at one point in the interview, dude, I started crying because he was talking about, and this is an 18-year-old, right? He was like, dude, I'm so scared. I'm dying. I feel like I can overcome this. And he starts bawling too because he realizes like once the cancer is all over your face, your lungs, your intestines, your legs, he even had to amputate his leg. He's dying. And at that moment, I just reflected on my own life. And I was like, dude, I gotta stop freaking complaining. Because even though I feel terrible because I have the flu, because I had to spend all day at the hospital yesterday or this or that, there's people out here that are literally on their deathbeds or are overcoming or are battling complications or from diseases or illnesses that are out of their control, that are taking their last breath, that literally only have a finite amount of time left. And then it puts everything into perspective. I'm like, dude, I gotta start being more grateful. So I know there's people out here that would do anything to trade places with me. There's people out here that would do anything to trade places with you, your situation, your lifestyle, and your net worth. Dude, they would do anything. And it ultimately made me think about my own life trajectory and how when I was depressed, dude, I took my life for granted. I literally did not want to live. I was like, dude, I hate myself. I hate my life. Like, what's the point of going on? Right? And just seeing how there's people out here that they have everything going for them, and yet they're hit with something that's out of their control, and now they have death sentence. It's like, dude, they would do anything to take my spot. Someone who is healthy, is cognizant of mine, and yet takes his life for granted. And that's why, like, I don't know, here's my call to action. Dude, let's just appreciate what we have. Because, dude, life could be so much worse than it is. You think whatever it is that you're going through might be bad? It could be 10 times worse for someone that is on their deathbed in New Delhi, India, or someone that doesn't even have running water in a small remote village in South America. All I'm trying to say is let's just be more grateful for the life that we have and let's make the most of it. Let's try to contribute to society and to our family in a positive way and to not take our one God-given life for granted. Let's make the most of it, okay? Anyways, I want to stop preaching. I'm getting out of hand here. I love you guys. Stay safe. Good luck in the stock market. If you want me to roast your portfolio, the form will be down in the pinned comment and in the video description. I'll talk to you guys really soon. Peace.